All right. We are doing a What's on Your Mind special edition, ETH Denver, joined by my friends Ishan and Nick. Ishan just got back from ETH Denver. Every time I go to ETH Denver, I wind up writing angel investment checks. It's bad. It's like Vegas, I don't bet on anything in Vegas. Like I have been to Vegas dozens of times. There's always like a random conference there. I don't bet on anything because I like positive expectation games, right? I go to ETH Denver and I blow money on angel investments, basically, is what happens. So I didn't go this year. There's a lot of travel thus far, although it's one of my favorite conferences. I really enjoy it. I think the developer, the builder community, Ishan and I met there last year. We talked for 3 hours one night. I wouldn't let you peel away. And we also had a permissionless debrief in September. And I remember the tokens we talked about there, like all up and to the right. You could have bought anything that had a pulse in it. It went up and to the right, though. And I'm joined by my friend Nick Rigel as well. And Nick and I have some exciting news to share next Monday. Stay tuned for that. But we're really thrilled about that. And Nick was a Merrill turned crypto native investor, so has seen both sides. Well, let's get right into it. So what was the vibe, energy, takeaways, highlights, ETH Denver Alpha? Let's dig into it.
Yeah, I think I could probably start there. Yeah, Denver's really interesting. I heard numbers upwards of 40,000 people were in attendance. It feels like we're back. A lot of interesting conversations, a lot of interesting narratives. I think if I were to boil it down into three major categories, I think it's restaking. I'm one of the bigger restaking bulls you'll meet. I just think the concept of being able to take a decentralized trust and export it to other application forms is incredibly interesting. But that was kind of the talk of the town, as everyone was like, there's new restaking primitives coming out. People are building these actively validated services that come out of restaking, and just generally like, what are the risks? Are we thinking about these things right? What are the different opportunities coming out of restaking? So that was probably the number one most talked about thing. Number two, and arguably number one, is the Bitcoin scaling space. And so mostly Bitcoin layer twos. There's a ton of capital going into that environment. And a ton of excitement, right? I don't think we've seen real excitement around the Bitcoin ecosystem in a while, but now there's BRC20s, there's the Rune standard coming out, you have ordinals, and just now people are like, oh, why can't we just, I think the progression of ZK tech in the space and just generally with Plonky 3 and like some of the stuff Polygon has been doing, and then you see Succinct Labs and some of the things that they're coming out with. I think just the progression of ZK tech has made it a lot more realistic to be able to have like faster proof generation. And so with that, people really think there's an ability to create like smart contract layers using proofs and attestations through the Bitcoin ecosystem. And so that's something like there's just a ton of excitement there, a ton of capital going into that area. And then the third one is like the one that I probably know least about or understand least, but is the talk of the town and the belle of the ball, is like the crypto AI intersection, which is, frankly, an area I haven't spent enough time to do the due diligence on understanding, but just everyone's talking about the different ways that crypto and AI intersect. A lot of it feels like cope to me personally, just like how can we kind of take a piece of this narrative. But I do think there are interesting use cases. But if I were to boil down like the three major takeaways from ETH Denver, I would say, a lot of AI, a lot of Bitcoin scaling, and a lot of restaking.
I love it. Great summary. And Nick, feel free to get in there. I have some reactions to that, but what are yours?
I mean, my initial reaction, I think AI and crypto is going to be, I mean, you're dealing with the two trends now where it's very easy to get the narrative just out running as fast as possible. And people know in this space that you can have the fundamentals and then you can be right or you can be wrong. But if the movement is going, then just either you follow it along, you just play along, or you just recognize, okay, how do I look at this from a investable standpoint? And then how do I look at this from more of a speculative standpoint? I think the AI tokens are, I think there will be something that will come out of that, but I think this is the first iteration of just people see AI and they're like, okay, well, I'm going to buy that because if everyone else is buying it, then I'm going to do it too. But I agree with you. It's like, we definitely have to really look at like what is a token use case for AI versus the leverage of using AI for maybe doing research or the kind of more of the back end analysis.
Right on. Let's go through those in turn. So I agree. Like restaking is primarily it's a primary ETH narrative as I see it. It's adding structural leverage to the ecosystem, which I believe is actually bullish for the ecosystem. It's not leverage coming from the grayscale Widowmaker trade, which is not the right kind of leverage. This is decentralized structural leverage. Maybe it ends in tears one day. I don't know, but it'd be a mistake not to recognize that it has very little leverage right now, and that number will go up, right? So you have to reassess and be aware of those risks. But yeah, I think restaking is definitely the Bitcoin scaling. Yeah, great point there. And also DeFi on Bitcoin is a new theme. By the way, here's another theme for you: shitcoins on Bitcoin. Have you heard of this theme? Shitcoins on Bitcoin is really funny. I'm not going to attribute this to anyone. I don't know if they want me to or not, but a prominent Bitcoin owner, if they're in the chat, they can out themselves if they want. I'll happy to give them credit. It's not mine. But their point was like, well, look, why don't we just enable like shitcoins on Bitcoin? It's hilarious. This is the kind of stuff that happens in the bull market. The phase of it we can probably get to in a moment, but and then DeFi, I think on Ethereum will come back. Look, stable coins have product market fit, and borrow lend is a great use case. Payments are working as well in the real world, linked to the blockchain. So it makes sense that you'd have a borrow lend capability there. What else? AI and crypto. Yeah, AI and crypto. It's like you're putting like a cocktail together, right? It's like, how do you take something that's high volatility, high beta, and combine it with the hottest theme in the land? So I do think there's some real use cases there, though. The decentralized GPU compute's a real use case. And, there are businesses out there, protocols, I should say, that have achieved some product market fit and generating some revenue. So,
I mean, look, I think when we look at also what could happen if the government comes down, especially in America, and say, hey, you want to rent GPU and you have to now do KYC, AML, and do all this stuff, and then suddenly there's a decentralized AI processing kind of capabilities. I mean, there really is, I think, a need for that from a global kind of, again, going back to the theme of like a global computer. We have this kind of persistent kind of contracts through Ethereum that started it, but now you have Solana, you have all these other things that are being built. I think this is such a small space to begin with that people get so tribal without even realizing it's like, what are we really being tribal about here? It's enough to be experimenting and say, whether I agree or disagree with you, let me get a better understanding so that it's not just the same argument. And the same arguments that we hear all the time, like, oh, crypto's a scam. Or it's like, you're so ignorant that you don't even know, like there's nothing that I can even say to convince you otherwise, because you know so little that you're not going to even understand what I'm trying to say. So then you end up talking to, but I think that's what's happening now is for whether, Bitcoin, Ethereum, or Solana, to just kind of discount everything as, oh no, it's just this, and this is all it's going to be. Same thing with AI, right? It's the same thing where there's like, you're going to throw everything out when there could be like a few diamonds in the rough that are like, wow, this actually makes a lot of sense. But you have to go through a lot of, to get to that.
There's a lot of, I'll say it, there's a lot of bullshit in the space. Yes, but there is opportunity. And yeah, look, if you're a skeptic, what you got to do is go to ETH Denver. You got to go to Bitcoin Miami. You've got to go to Solana Breakpoint. Mm-hmm. And you've got to tinker and experiment and play around with this stuff and meet people like Ishan and Nick and dozens of others. And that might help. But you raised a great point, Nick, on the AI theme, right? So there are two responses that have happened in the last few years politically, right? One is the US sanctions on Russia, and China's looking at that and saying, gee, how do we protect ourselves from that? And many other countries are too, right? And on AI, to your point, right? So there are now export controls on China. And so decentralized technology is one of the countermeasures that some of these countries might adopt. Now, ultimately, these servers and GPUs are housed and domiciled somewhere, so they have to comply with law and OFAC and all the rest. But there's going to be a demand for those kinds of services. It's an interesting question what it means if you own the token and you're an investor or the issuer of the token, all that stuff. But what else? So, Ishan, what was the vibe like? So 40,000 people in Denver. Did you buy the ticket or did you just hang out at the hotels and go to the parties?
Well, tickets are free. So it's actually ETH Denver is one of the few that all of the conference tickets are always free every year. And so it's like you at that point you might as well go to the conference. One of the interesting things that I saw was RFK actually did a booth at the main conference, which I thought was really interesting. I mean, it kind of makes sense. He also did like a couple activations over there. He did a kind of press conference type of thing, not to make it political or anything like that, but I just thought it was very interesting as an independent to come in and try to like garner this vote.
I forgot he's still running. Yeah, that's. So he's raising funds in Denver. Okay.
Yeah. Gotcha. Another one of the interesting things that we've been seeing a lot of is just DePIN. And I know like a lot of people are very
decentralized physical infrastructure, like Helium token or Hive Mapper on Solana.
Exactly. Yep. And so we find DePIN really interesting as a firm, like just physical real world use cases. I think we spend a lot of time thinking about moat in the space, and so like where are their moats, where are their natural moats, and so I'm how I got into the space is like through DeFi. I'm one of the like biggest DeFi bulls you'll meet, but DeFi does not have a very strong defendable moat. And especially where in a space where you need open source code in order to build battle tested bulletproof applications, almost takes away your moat completely, right? Where then you see the compounds and the obvious of the world, and as far as Borrowlands, and they've built really great applications, and then people iterate on them and build new applications on top of them, right? And so that kind of really takes away the moat that a lot of DeFi has, whether you're a PERT protocol, you're a Borrowland, you're a DEX. We've seen this through Uniswap and the Sushi Swap era. Like it's just naturally.
You've seen more vampire attacks. So the Uniswap Sushi Swap is your point, right?
Yeah.
But Aave and Compound are still the leaders, and there's Maker, of course, which is this hybrid stablecoin and Borrowland. Just challenging you a little bit. It's like, have you seen? Good.
So I think that there's definitely lindiness, and that's generally why I'm pretty bullish on DeFi 1.0. But I think the point that I was going for was that DeFi doesn't necessarily have a super defendable moat. I think there's probably a world where some new innovative Borrowland protocol potentially takes a large percentage of market share. Think about your Radiant Capitals of the world, things like that.
Right.
But I think what does have a moat is like a question that we're constantly asking ourselves, right? And places in the space that does have a really strong defendable moat is physical infrastructure networks, right? Because you can fork a lot of things. You cannot fork hundreds of thousands of pieces of hardware.
Right? Real world interactions.
Exactly. Definitely.
Right. There's a data center somewhere. It's got compute, or there are Uber drivers linked up to Hive Mapper and all the rest. So got it.
Exactly. And so that's why we find
interesting. Go ahead, Nick. Go ahead. Yeah.
I was just going to say, I think you're right on. If you can connect it to something that is not just so easily just copy paste, the old pasta code that we went through, especially in DeFi summer. It makes a lot of sense to me, and I think it's just more of, as more folks get into the space and they start recognizing, oh, we need this. So I think it's going to be the second order effects that are going to really drive DePIN, which could happen sooner than later. So I would imagine in the next year, we're going to see we're using this type of technology.
Well, the AI thesis is actually a special case of the DePIN thesis, because
with the compute. Yeah.
I do like that thesis. I'm not sure about the other use cases. Like on Helium, we've seen how the incentives can build out supply on the network. People are motivated to get a Helium miner, but we haven't seen that demand. And I haven't checked on Helium in a long time, but I'm waiting for the proof point on the demand side.
I think it's going to be one of those things too, where this bull market continues, and they're going to say, okay, what is next? So it's going to be almost like a self-fulfilling prophecy, just like everything else, where people will create their own demand in order to feed their own supply. And I mean, it just the nature of the space, right? Like if you are an advocate, you're going to get your other friends in, network effects. And then it's like, okay, how do we make this viable? And I think someone's going to come out with some sort of idea. I mean, it goes to like social networking. I mean, I think Forecaster was kind of just going along. Suddenly they're like, oh, wait a minute, we can do frames. And it's like something's going to happen where it's just like, oh, wow, this is the perfect use case. So people will get into it because they'd rather be early if they're already in the space than just say, I don't know about the use case. It's going to feed itself.
It's
Yeah.
it's the classic like bootstrapping the two-sided marketplace kind of. It's something that we've seen like essentially for like, you know, in the past decade and like so many pieces of Web 2 and Web 3. And so I think it's a solvable problem. I think like I'll give you guys a really interesting example. You know, like one of the first boots when you walked into ETH Denver, and this is a team we're pretty close with, is the Demo team. So they probably just raised like $10 million. You know, Coin Fund led their round. Bill Ackman's actually one of their largest investors. I mean, Bill Ackman does not do a lot of crypto. He's like very much on the sidelines doing like very traditional, you know, he's a traditional investor, but he's very much in tune with the space and just looking for those true consumer use cases.
Okay.
And so Demo is, again, it's a DePIN project, and they're essentially, you know, these a majority of cars, you know, Progressive did this for a while, where you have these physical pieces of technology you can plug into your car and it takes your car data. And the idea with Progressive was that, hey, if we put this in people's car based on your driving score, we'll give you cheaper, cheaper insurance rates, right? And so Demo's thesis is they built a similar piece of technology that plugs into that same carport that essentially every car has. But you get to own the data that you get, you know, and you basically mine these Demo tokens in exchange for that data. And then there's a lot of different use cases for that car data, right? You can sell it to car manufacturers, right? Think your Teslas, your GMs, those guys of the world based on car performance. You can sell it to tire manufacturers, think your Discount Tires of the world. You can sell it to insurance providers, right? Imagine if you can create a network where you can release certain aspects of your, you know, driving analysis or like your car data to insurance networks and then release it to 4 or 5 and have them bid on the price of your insurance against each other, right? And so that's one of these things where it's a physical infrastructure network. It's a high moat, and there's real world use cases, right? It's like if an average user can earn tokens in order to get cheaper insurance on a day-to-day basis, right? They can, you know, get better an understanding of whether the mechanics that they're choosing are diagnosing the right problems for them, right? If there's like an ML model that plugs into it, the quality of your tires and what's the actual driving life of tires, right? That's something Discount Tire would pay a lot of money for. And Discount Tire doesn't want to go through the GMs of the world and the Fords of the world and, some of these large.
It's an interesting use case. Yeah.
No, it's like the next iteration with AI is data sets. And I think what's funny now is we're now seeing that everyone else's data set that's open source. But what's next? I mean, a company that might be a large financial firm is not going to give away that data because that's their prized possession now. So how do you go about if you're trying to build something? There's a real use case there.
Well, basic attention token was one of the attempts to address this, give users control of their data, enable browsing. I've been checking out what it's doing, but it's one thing to have a concept. It's another thing to have traction and results and build a real decentralized business on this.
Yeah.
So I want to see how all that plays out. Ishan, when you and I met at ETH Denver last year, I think we spoke about optimism for like an hour. I don't know if you remember that, but we did. I remember a few things here and there. My kids keep me up, so I don't remember a lot. And Nick and I had a debate on optimism this morning. Now I'll frame it up. Look, optimism's powering Base. Base, I think, is an incredibly clever strategy by Coinbase to participate in the L2 ecosystem and give Coinbase participation in that, and also play this role of linking the decentralized digital world to the real world, which we've been talking about. It doesn't have to be physical infrastructure. Coinbase has KYC capabilities, AML capabilities, money movement capabilities. There's a space of things that can be unlocked over time with that ecosystem. There was Nick, do you want to share the negative sentiment kind of?
Yeah, I mean, I think, in the vein that we were just talking about, like open source and open awareness. And it's like, hey, by the way, guys, we just did a $89 million token sale to somebody. Cheers. I just adds like, wait, what? And I think it makes it like, okay, I don't know how I feel about that. Like, it's more like, I want to understand both sides of the story, right? Because it's just a learning mindset that we all have is maybe there's a reason. Okay. But it just adds that seed of like, well, why was it private sale? Why this? I'm sure there's good reasons behind it, but I think the first initial gut reaction is like, oh man, OP, like what? It makes it less of a token versus project of just basically being like, I don't know. I don't know how I sit with that.
So
reservations.
Yeah, I do want to caveat, like, optimism's a client, and so we do hold quite a bit of OP in the treasury. So
yeah,
but even regardless, and in their defense, every other L1 and L2 does the same exact thing. They just don't disclose it at all. And so I candidly, like, hey, do I think it was the right vision for what the things that they're trying to achieve? Candidly, no, right? And I think even a lot of the people at OP will tell you that as well. But is it something at least they did disclose that a lot of other firms just frankly don't disclose, and a lot of these other large L1, L2s do the exact same type of treasury swaps, and that they just frankly don't disclose these things? Yeah, definitely. So
that's a great point. Is there a service that covers who is conducting swap transactions? So there's
large OTC private rounds. I don't think anyone has that type of like internal access.
It's all in a Telegram group somewhere.
It's all secondhand, like word of mouth. Like, oh, well, we think this and we think that, and then people
I'll give you
together.
I'll give you some Telegram alpha right now. So FTX sales of Solana.
Oh yeah.
You guys tracking this one? I see some heads nodding. All right.
Yeah.
So that story's out there. While Solana is at, I believe, around all-time highs, certainly like yesterday. Okay. So there's a trade people are putting on, which is where you can buy Solana at a 50% discount from the FTX estate. You're going to be locked up for a period of time now. It's interesting, especially interesting is if you can hedge your risk, which you can do. Obviously, you're going to take counterparty risk somewhere in that transaction and build a clever little structured product out of it where you can, if you hedge out the risk, you've got like a 2x on this, provided you've got a good counterparty on the other side, like a 2x within 2 years plus or minus. Not bad. I mean, in crypto, that's like, really? Can't you do better? Like, the equity market is like, wait a minute, this is like buying Coinbase bonds at 50 cents on the dollar. You guys remember that trade, by the way? Wrote about that one. I think that pulled to par. We're done with that now. But
yeah, I mean, it was great arbitrage. I mean, it just, when everyone gave up on Coinbase to say, hey, you can just buy these bonds and we're
$5 billion in cash in the bank.
Yeah, it's just like, it was just more of like, going back to your point, like, is there something else I can do more than that? It's just
that's the funny thing about this space. So I remember in 21, similar vibes where it's like, well, you can lend out your crypto and earn 29% return. You can earn a 29% for lending out your crypto.
Yep.
Which is a phenomenal return. That would beat the S&P and S&P last year. Right? But the demand for getting long spot is so strong, which of course is what drove that funding rate up, is that the best use of capital? So interesting.
Yeah. I mean, I was checking, I think yesterday, like margin fi, like lending USDC was like 40% for a short time. Now I just checked, it's like 18%, but it just, the ebbs and flows, especially if you're liquid, like, do you want to tie up something? Because you don't even know what the next opportunity is. But at the same time, I can see where the state is more of a question of your kind of your end state goal here. Do you want to lock yourself up and not know where you're going to be in 2 years, or are you going to just go for it and just be like, that sounds like a great allocation, it keeps me out of trouble, that type of thing? It's almost like a more behavioral guard, if you will.
Which is key in crypto, I would say, as with a lot of investing.
Yeah.
People are their own worst enemy. So,
yeah,
Ishan, go ahead.
Yeah, just trying not to get blown up.
Right.
Yeah, I think this is the right trade for the right person. And I think like Pantera sounds like they're doing like a massive SPV to do this. I think that's the right trade for the right person. I think like if you're thinking that you're going to buy this in size, like 8 or 9 figures and then go short, but the problem is like, how are you going to cover it, right? Like, are you going to sit a bunch of capital in an exchange to cover your perp short or something like that? Like, yeah, you might collect a little bit of funding and that might be interesting, but like, if you think you're going to put this on over 2 years, like, are you just going to lock up that extra capital to cover the short in order to is that incredibly capital efficient? I think it's, if you're just long Solana and you're just like, hey, we're going to do this over a 2 to 3 year time horizon, and we're just net long, it's great. But I think what a majority of people it's going to happen to is that it's going to look awesome in like 6 months when Solana is probably $300 to $400. You're going to feel like a genius. And then in 2 years, when Solana's back down and we're outside of this cycle and we're on the other side of the next cycle and it's back down to $100, it's going to be a stupid trade. And so at that point, it's like, I was offered the round. My take is I'd rather just sit nice and pretty in spot and just give myself the flexibility and the liquidity. And, if it so happens to end up just being this kingmaker trade where, hey, Pantera goes and makes, 7x in 5 years on their money, good for them. But I think for a vast majority of people, probably not the best trade.
Well, how would the 7x in 5 years work? Because I thought it's a hedged approach. No, I thought it was market neutral and essentially token.
Sorry, like Pantera is just going to be net long on it, so they're not going to be neutral, right? They're just going to go straight long on it, and they're just going to sit on it for 3 years, right? And that's
all right. I see. Oh, I see. So I've seen variations on that strategy where there's a hedge built into it.
Yeah. To clarify, I think a lot of people would think about just doing what you mentioned, which is let's go long, let's short the perp, let's just stay market neutral and kind of play it out. But I think the issue with that trade is how are you going to cover it for so long on the short side? And so I think someone like Pantera is perfectly suited to just raise an SPV, go mega long, and wait out the trade for 3 years, and just sit in with the 7x in 5 years and be happy and return everybody's capital. And that's a great trade for them. Vast majority of people are going to try to play this like hedge position, and I think that it's just not the most capital efficient thing. But I actually do have to hop. But I appreciate the time, guys.
No worries. Thank you, Sean. Always a pleasure.
Yeah, take care.
So Nick, one of the strategies that we were talking about earlier is how you generate yield off of these tokens, so you get more out of spot.
Yeah.
Right? I mean, it's a pain in the butt to do Uniswap transactions and then go stake. And I mean, if you've got like a day job, it's a pain in the butt, or you got a family, or you just want your time back. Why don't you walk through? This is a preview of something Nick and I are teaming up to roll out next week. We're going to have a broadcast here with L1 advisors. So do you want to give some highlights?
Yeah, I would take a step back, and I think a lot of people, depending on if they're even know yield farming or liquidity provisioning, I think the first thing they either come away with is like, oh, it works for me, or they come around and say, hey, there's better ways to do things. It's not as efficient as XYZ that's out there. So I take the step back and say, if you have positions that you're looking to, from a behavioral standpoint, say, you know what, if something happens, I want to sell something, or I want to get into something, using something like Uniswap V3 as an entry or exit strategy could make a lot of sense if you structure it right. But going back to your point, how much time does people have, especially if they're already in this space and they're like, okay, that sounds great, but I'm not going to be able to watch it. So the performance, I think, is indicative of how much time or how you structure it. And the people that can do it very well, you can see their performance on chain. So people can actually look and see, okay, you can do it from a macro viewpoint, but sometimes when you look down and see that somebody might have 5 or 6 or 20 different positions on, and then you have to correlate like, okay, well, this is actually all one person or one entity versus looking at it at just wallet specific performance. So I think there is some research that will back up that there is a time and place for it. And for those folks, having something that is more in a liquidity, something that can benefit from the volatility, can make a lot of sense as both a bolt-on to a long-only strategy or to the other things that they're doing. It's just like, how can we make it so that's a lot easier for folks to review the transaction without, I think a big core of this, without giving up control. So if we can create a strategy that we can recommend, and the person has the right to say, you know what, no, I don't want to do that, reject, or, okay, that sounds good, approve it. And that approve encapsulates all the instructions. So basically they're still signing through their multi-sig, safe wallet, or through whatever kind of hardware wallet system that they have with MetaMask or Coinbase wallet or the Prime wallet, for example. They're not giving up that self-custody. So L1 is a platform that really provides that capability of facilitating with an asset manager or an advisor with the individual.
Right. L1 is a software. It's a startup, right? Van Eck is an equity investor. I'm also an equity investor. Essentially, what it
I am too.
enables.
I also I have to disclose I am also an investor too. But I
Sweet.
became an investor because when I left Merrill back in 2022, I wanted to work with clients with crypto. Like, in fact, that's kind of, I really got started back in like 2017, just buying ETH and holding it on Coinbase. I'm like, man, what an idiot that all the things nothing happened, but we don't know. Self-custody, to have the option of self-custody, I think makes a lot of other people honest. The fact that Coinbase has Coinbase Wallet gives you that flexibility. But what is next, right? So now you might be sitting on ETH, you might be staking it. What else can you be doing with that? And I think that's what L1 answers that question.
What I love about it, I'll frame it up for everyone. Basically, it's like crypto wealth management as a service, but you control your keys. You pick whatever wallet you want. And so I have a couple different wallets. I get a notification in my wallet saying, Lumida says you should buy this token or sell this token pursuant to a strategy that's already been discussed.
Mm-hmm.
That could be a yield generation, income generation strategy on core portfolio. It could be a growth strategy on quality tokens that have the right themes and underwrite overlay, or a momentum strategy, which is kind of an interaction of growth and momentum, which I think is pretty interesting. But yeah, it's, you control your keys.
Yeah. And you can control your history too. So I'm showing this is just kind of like a way of looking at a strategy that can be rebalanced, and you can look at things, and then you can give recommendations to your clients. So as a client that might be saying, you know what, I have time, I know what's going on, I could do this, I just don't want to do it all the time. Help me make sure I manage things and move things based off some sort of process.
What I love about this here, what I love is the convenience, because I just telegram Nick.
Yep.
Random time during the day. Now Nick is on it, during the day hours, but I'm like, hey, what do you think about this protocol, that, and can make an execution decision that's just effortless. And I don't have to interact with a smart contract and make sure I'm worrying about 10 other factors and log into Coinbase. And then there's 5 other things I got to do there. Coinbase is great. I still have a Coinbase wallet. It's a great fiat ramp and other kinds of things. But the opportunity, there's core, but then the long tail. Like, if you can own tokens that are going to get listed and go through that journey, Coinbase, like the last IPO for a token, right? Gate.io is probably the first listing, right? And there's a curve these tokens travel through. So this allows you to pre-position and just get your time back and the service and the convenience, which I think is just that's what, I don't know.
Yeah.
People certainly need. Yeah.
I mean, and that's what we're kind of going at is there's that long component for that growth or that momentum kind of aspects. And then there's that yield component of saying, all right, now that I have this, something's going up. Maybe I don't necessarily want to sell it, but I want to have something that it will benefit from the volatility, the back and forth, because nothing goes up in a straight line. We're going to see this back and forth, especially if it's simple as something that's just like Bitcoin and Ethereum, wrap Bitcoin and Ethereum trading on Arbitrum, for example. It gives you that way of kind of consolidating away from just holding tokens and then doing nothing with them. But I completely agree with you. I think there's a lot of opportunities to look at what's happening. We've seen this. History often rhymes. Maybe it's not the same thing, but it's going to be the same type of human nature.
I agree. So more on that to come. There's a preview. We hadn't planned to share that, but it does make sense. We made this little website called Digital Assets Trade. You guys can check it out if you want to learn more about that on the lumina.com page. But it walks through how that comes together. We got to add a few more components here, like the strategy descriptions. One of the things that I'm kind of inspired to build in the last week or so, and this is partially of what it means of where we are in the market. I've had people say, hey, look, I want to put a small portion of my portfolio into a high return, high risk strategy. I call it like risk adjusted return YOLO strategy. Because people are looking at things like bonk token, whatever token. They're like, all right, because those things just require, you got to hover, it takes tremendous supervision. You have to have a fundamental underwrite on it. You have to know as a smart contract. So there's a lot to do. And, there's a lot out there going on in the world. So different themes and narratives. So, we're going to give some thought to that. If there's interest around that, you can let us know in the chat. I know at Illumina, we built out our alternative strategy, our public equity strategy. We've got a crypto sub-advisor, crypto venture. We got a bunch of stuff, right? Nuclear renaissance themes. We're excited about how they've been doing, performance, and but I think that the gap we're missing. But there's this part of the market for, I would say, very wealthy people that can take on this kind of risk, who are saying, look, I just want something that has a shot at doing like a stupid return and willing to take the draw. So I'm going to spend some time on that. I already have been spending some time on that. Like, is there this should be a topic in its own right.
Yeah, it should.
Is there like a responsible degen strategy, right? if you were handed all this data about these coins and tokens, right, and we could vet and filter the bullshit ones away. Now, there's still a lot of bullshit within that population, though, nevertheless, because there are themes and narratives, right? Like Dogecoin went up 45% one day, right? That's an opportunity in a certain sense, right?
Yeah. No, it is, because when we look at,
I'm just saying generally.
Yeah, no, yeah. We're just talking in terms of like high level. I mean, I think what I'm most excited about this is from a institutional investment standpoint. We both came from backgrounds where it was heavily research based, and you have all these ideas, and then it'd be like, no. It's just no. We're not going to do any of that. And then it's just like, okay, or it's like, oh yeah, that's good, but we don't have the infrastructure to support it. Here, we finally have all this available information on chain research. We're bringing that traditional kind of analysis in, looking at the behavioral finance standpoint, and now we can actually build our own stuff. And having that ability to kind of like partner and work on building the actual infrastructure based off of client feedback, I think is just so amazing. Because how many times I know I remember in the past where clients would be like, I would love, smart guys, doctors, PhDs, biotech. I'm outside of Philadelphia, but there's a lot of biotech folks that are like, oh, I would love to buy X stock or do this. Well, now they can on chain, but they just need someone to help implement and structure the scaffolding, if you will.
Right. It's also one thing to have a concept. It's another thing to research, underwrite, and then execute.
Correct.
And then monitor and then supervise it. Like, idea generation is the easy part.
And being able to have a way to do that idea generation and fit it into this system. And I think that is, I'm just all the stuff that we've been kind of preparing for this too. This is a long time coming, which is so funny how it takes time to build and go and think through what's happening from a regulatory environment, what's happening from just a macroeconomic. Now, finally, things are aligned.
Yeah.
And by having the non-custodial, the fact that they can still self-custody, and we don't want their assets. That's what's so amazing, is this is all assets under advisement. I think it's
exactly. Never take control. Exactly.
Yeah, we never take control, and we never allow for it's all on chain, right? So now potentially, I think we're going to see other investments and things that are going to be brought on chain. So I do believe that it's not about, it's the meme, like it's not about the ETF, it's about ETFs on ETH, right? And I think that's the concept of could be, again, explored with Bitcoin or Solana too. I'm not a maxi. I'm more of a, again, try to see both sides of the story here, because a lot of people are very smart and they have a lot committed to the space. So I think the passion, like filtering out the passion of separating price of token versus project. You can be very bullish on the project, but the price may or may not be the right time to get in. I think that also helps when you work with someone else to separate that. You can kind of let go of your emotions.
Yeah, exactly. No, that matters a lot too. Having someone say, look, you own too much of this, or it's time to take the gains, or don't make a stupid decision. Like on Tuesday, for example, a number of tokens dropped 45%. I was on a Real Vision Pro podcast, and the last thing I said was buy the dip.
Yeah.
Worked out. So, but yeah, it takes, having another person who's monitoring the flows, the activities, staying on top of, the research can help. And, for me, I think the killer app is just the service, leaving aside the insight and research. I mean, that's just killer, because these experiences are not intuitive. And even if they get intuitive, right, like Robinhood is very intuitive for equity buy sell trading, but I always prefer having an advisor anyway, because I have a human being to talk to about the markets or ideas or think about portfolio construction or watch positions or take advantage of tax loss harvesting opportunity or write a covered call when markets are getting overheated so I can generate some income and protect against losses without incurring a taxable gain from selling. So those are, I think that experience is still invaluable for, people that have wealth and are looking for a service to give them.
Yeah. And being unconstrained, right? It's not just like, oh, we can only help with things that we have under our control. It makes a lot of sense for traditional equities to be under the control of a custodian so that you can make those trades because they're very tactical. But within crypto, I think it's good to have both combinations, right? In terms of having the option to self-custody drives this concept to now suddenly saying, okay, yeah, I want an advisor for the actual advice and the strategy and help me manage this stuff. But I don't want to give up my crypto stuff. That's my kind of mindset of I don't need that.
Yeah, no, I agree. It makes sense. Like the premise
You
of
can do both. Yeah.
Trustless, permissionless systems. So
it's new, right? I mean, I think it's so new that folks are still getting used to the concept that that's even available now. It's like, wow, wait, I can actually work with like a fiduciary with crypto without being told just to sell it all, right? Because that was that whole. I mean, the co-founders of L1. I mean, Miguel was saying like, man, I had this. I wanted someone to help me with my financial planning, and I went to these advisors, and the first thing they said is, just sell all your crypto. Like, we need to be more resonant of like, here's where you are, and here's how we can help you. And I think that's where Illumina has just been doing a phenomenal job of making that as an option for folks now. And being able to work with you as a sub-advisor has been just so exciting. Because I can focus on the investment analysis stuff.
Likewise. More to come on this. We're going to share more on Monday. We're going to do a demo of this software. I think Lumina might be the first SEC registered investment advisor to offer this in a compliant manner. One of our investors is Arthur Levitt. Arthur's an equity investor. He's not, in the day-to-day, but he's a dear and cherished friend. And we wrote an op-ed together criticizing Chair Gensler in October of 22 at the bottom of the bear market. And together with Nick and L1 Advisors, we found an approach to do non-custodial crypto wealth management as a service. So super, super exciting. More to come very soon. I think we'll have like the service component. That's immediate. That's like now. We're already beta testing that now with clients, including myself and others. So you can just go to illumina.com and, get on the wait list if you're interested in that. And then the yield farming strategy, that's a basic Uniswap yield strategy. Growth strategy, that's now 2. That's like here curated tokens. And the third one, which is like call it risk adjusted yield low return strategy. We got to find the name for that.
Yeah, something that, but it
momentum, it's like momentum quality. That's basically what it is. Momentum quality.
Away from the idea of just a project. So there's filters to avoid things that are, but it will extend beyond just the normal, here's your growth and here's your yield farm.
Yeah, core satellite.
Core satellite approach.
Core should be quality. Core should be quality. Don't mess it up, people.
Please. It's not the trying to do the 100x leverage.
Core is quality, right? Exactly.
Yeah, we can do this without leverage, guys. Like really, there's enough risk return here that you don't need to like put yourself where you're right, but you're just wrong over the timing.
Right. You don't want to multiply your portfolio return by a 0. You can't recover from that.
Yes.
So what else? I think we can call it a wrap unless there's anything else you want to share, Nick.
No, I'm always open to feedback too. So like if there's anyone out there that's like, hey, what about this? Like this is the time we're building. So we take all feedback.
Absolutely. Well said. I love that we're going to have public wallet addresses here too. So if you want to look at the yield strategy track record, like here it is. Take a look.
All on chain.
What else do you need?
Using the use case that crypto came out for, which is self-custody, decentralization, full record keeping. Like finally, we're actually leveraging it for advice now.
It's awesome. I'm really excited. All right, folks, let's call it a wrap. Thank you so much, Nick. Have a wonderful weekend. And thank you, Ishan, as well. more soon. Tune in on Monday. More to come. Bye-bye.
All right.